Hello, friends. Welcome to the BFSI Economic Times Budget Series grand finale. Because we have been running this series of the budget live, carrying budget expectations of the BFSI leaders since the first week of January. And today, Finance Minister has declared the Union budget, which is actually the vote on accounts or the interim budget. But not only just its vote on accounts, despite its vote on accounts or interim budget, the finance minister still had added a lot of meaningful points. The markets, the economists, and the experts are very happy because of the path specifically on the fiscal deficit front which the government has chosen and the kinds of capex or specifically the investments which they are making. So let me introduce you to the top speakers that I have with me, which is going to share with you meaningful information and more learnings from the budget. So, friends, my first speaker for this particular panel discussion of the session is a veteran banker, Mr. Sunil Mehta, who is a Chief Executive Officer of IBA, Indian Banking Association. Sunil sir, glad to have you. My next speaker is Mr. K. Paul Thomas, founder, MD, and CEO, SF Small Finance Bank. Mr. Thomas, glad to have you. My next speaker is a veteran economist, a well-known name in the economy world, Shubhda Rao. Shubhda Rao, I'm glad to have you.
Pleasure.
Next speaker is Mr. Dheeraj Relly, MD and CEO, HDFC Securities. Dheeraj, glad to have you. Our next speaker is Mr. Alok Rungta, Deputy CEO and CFO of Dali India Life Insurance, and Mr. P. Srinivasan, MD and CEO, Protectus Capital. Mr. Rungta and Srinivasan, glad to have you as well.
Thank you.
So, what I have learned, the first reaction from everyone is quite happy. I could see some happy faces as well. Maybe the investments are more, the capital expenditure is more, or specifically the fiscal deficit. The kind of roadmap that the government has provided is quite robust and meaningful. I would like to ask all of you, how are you? What made you really, happy out of this budget, and what is your first reaction? Sunil sir, I will start with you first.
So my first reaction is this is a very balanced budget because everybody thought that before election the budget will be very populist, but the government has presented and the FM has presented a very balanced budget, which is in the lines of the expected lines. The deficit, the budget deficit, which has been decided that will be expected by 5.8%. Now that is projected to be a 5.1% during the coming financial year. So that's a very positive number because fiscal deficit, if it is managed, this will definitely give a lot of convenience to all stakeholders. The second important aspect is they have not made any radical changes into the tax structure. That means creating a stability of the existing regime and as well as providing that it's not a populist thing. It is just a continuity of the existing framework. And third important thing, the focus which they have continued and says is like poor, then women, then farmers, and these segments have been given a extra weightage in terms of the FM has announced that this much we have done for the poor, like 25 crore people were helped during the last 5 years, and then crop loans were given, and the insurance cover was given to the 4 crore farmers. So all these things were all positive aspects of the growth story which the country has observed during the last few years. And the thing that has given the comfort to the bankers is like with the borrowing program of the government has been mellowed down. So everybody was expecting that last year it was 12 lakh crore and this may even exceed this time. So that has come down. And in the process, you see the bond yields have softened. So that will provide some comfort to the financial sector. So in a way, banking industry, and we feel that this is a very balanced and a good budget in the present set of circumstances.
Sure. Shubhda ma'am, you heard bankers are happy. Obviously, we'll take views from the Srinivasan sir and Thomas sir as well. But are the economists very happy? Because, the first time it has happened that government has actually reduced from what the economists actually predict.
Yes. Absolutely. I think that to me has been the biggest takeaway, that of a continuing resolve to maintain the fiscal discipline. Let's not forget As recently as fiscal 21, our fiscal deficit ratio was 9.7, and to systematically and consistently bring it down to a 5.1, I think is a commendable achievement. Shows a very strong and healthy resolve of the government to free up the resources for the private sector, the productive funding for private sector. And I think, to me, as Sunil was also alluding to, refraining from populist kind of measures, what I would think is this is more a confident government, having seen a serious degree of macro stability in the country amidst all the global disruptions that we have seen since COVID. I think gives the government the confidence to refrain from populism and moderating inflation, a very respectable growth, and I should say a very outperforming growth if you look at the global growth numbers. IMF recently came up with a growth forecast as well for India to grow at 6.5% over the next 2 years. I think that itself is a kind of a validation that India economy is in a very happy Goldilocks place. The revenues, the forecasts, and the assumptions look,
Right.
I would say, conservative. That has been the mainstay of most of the budget arithmetic of the past few years. And this is what has been maintained in terms of the conservatism, be it on the nominal GDP growth at 10.5%, or even the tax revenue collections. All of these have been kept at a very conservative pace. Somebody was earlier talking about under promising and over delivering. I think that's what the government has been doing over the last few years. And to sum it all up, the focus is on the capex, continues to be 4 years average is 28%. And given the fiscal consolidation correction of 4%, I think is a tremendous balancing act which the finance minister has displayed in the budget.
Oh, sure, we'll come back to you and learn more. But in fact, one interesting line the finance minister said is it's a golden moment, golden opportunity. Quite meaningful one. Dheeraj, let me come to you and take your first reaction on the budget.
Has already covered most of the points and Sunil as well. But I would say one thing that, this reflects very clearly that the government and finance minister are confident about the coming general elections. That's why they stick to the true spirit of the vote on account. I think that's very commendable. And though it proved to be a non-event for the stock market, but that's how the vote on account should be. Coming to the budget, I think it is clear that they are going to consistently follow a long-term vision, what they have for 2047, and to take India to a Viksit Bharat. And the thrust on infrastructure will continue. People were expecting a little higher number on the capex side, probably 12 lakh crore or so, but you have to see in a different context. The current year number is revised to 9.5 lakh crore, and 11 lakh 11,000 crore kind of numbers for capex for the FY25 is almost a 17% growth. And now the government in last couple of years have done already a big heavy lifting in terms of a capex. It's high time that we see more capex coming in from the private sector space also. Is in a infrastructure deficit country, and if government as well as private sector capex can come hand in hand and do a heavy lifting together, then my take is that it would lead to a good improvement in the demand even at the rural and urban level also. Though we have seen K-shaped recovery and lots of discussion have been done on that already, but somewhere we are still having a tepid demand from the rural side. I think the thrust on the capex should help us to continue some money going to the bottom of the pyramid in terms of a population. I was expecting that government probably would do some kind of a play with the income tax and probably pass on some of the money in the hands of the lower income group, but they didn't do that. And I think that's right from a vote on account spirit point of view. This was her sixth budget, and it was almost like a hitting a six out of the ground. So
Yeah.
that's how I'll sum it.
Yes, noted your points. But I think let's hope that passing on that money to us specifically the next budget at least. Let that ball be there. Thanks for adding that, Dheeraj. Mr. Thomas, let me come to you and learn obviously your first reaction, but can you also add to it in terms of, do you think being a small finance bank, there will be some pickup in the growth because there are a lot of aspects that the government has spoken about, whether it's tourism, whether it's Matsya, Awas Yojana or something like that.
Yeah. Yes, thank you, Amol. I fully endorse the views of Sunil ji. It is my first reaction is that it is a very inclusive budget, and it is a directional, not for a 5 year or 10 year period. It was a 25 year period directional, and also very balanced, as the other speakers have pointed out, the fiscal deficit and the focus on the sectors, and there is a lot of continuity. So from, if you see the budgets and other announcement outside the budget from 2014 onwards, they have been very consistent. So the honorable Prime Minister and Finance Minister, in all their announcements, they have been very consistent. They mean development. They mean social inclusion. So the as a Prime Minister defined GAN, the Garib, the youth, the Annadada, the Nari. So all these sectors, the four segments were addressed through these directions. So there was not many specific announcements in this because it's a auto on account. So, but the directions are there because all these existing projects focus will continue. So when it comes to a small finance bank perspective, so I see a lot of opportunity, especially the PMAY scheme, extension of PMAY scheme for another 2 crore houses. And that will solve the housing shortage in our country. And also, it is a great opportunity for banks to get in to lend with the interest subvention, and it's an attractive sector that we will see. And another area where we are all, as a small finance, we were in a microfinance institution before converting to a bank. So we have been working with the women entrepreneurs, self-help groups. So there is a focus. There is an announcement that they will focus on create more than 1 crore women entrepreneurs. So that is another opportunity we see to work with the government. The other area I see is that the farmers, the schemes announced for farmers and food processing and micro food, PM micro food processing clusters. So these are all sectors where banks like us has got a lot of opportunity to partner with the government and using the government's interest subvention scheme and guarantee schemes to scale up the lending. So one interesting another, I will stop with that now. One another interesting part is that there is an announcement of a long-term low interest or interest-free 50-year funding fund for private sector innovation. So that is something really need to appreciate government. And many times in over the last 75 years, India in innovation mainly happens under government's initiative. So the private sector participation in innovation is something really appreciated. So that's my
Noted.
remarks. Yeah.
No, sure, Mr. Thomas. Thanks for adding that. So, look, as we were exchanging notes before we started, there is neither good, but good is there is no bad news for the life insurance sector as a whole. But anything that you really impressed by, after hearing the finance minister's speech, anything that made a difference for you?
So two, three things. One is, as my fellow speakers already spoke, they have done an exemplifying job on fiscal prudence, right? And they have taken care of a lot of imperative sectors, right? So if you see, a lot of thrust is on SME, small and medium size, and I feel a lot of work from an execution point will be done in the rural sector. So they spoke about biogas, right? They spoke about a lot of these four priorities: women, youth, poor, farmer. So, see, we have been talking a lot about rural consumption, rural demand being pushed, right? So, they have not done a populist budget, right, of stimulating consumption. But I think through these projects, a lot of those announcement which has happened, Sir Paul Thomas was saying, from a small bank perspective. So, a lot of the investments and projects will move in those areas from an execution, and I think that will, in a way, drive lackluster rural demand or consumption. And in any economy, once that part of the segment or quarter of the society starts contributing more than what we expect or what we are looking forward, I think it will make a big change for the entire economics. And I think that's where it will become a more sustainable growth. I think that's where I love the concept of what they have been doing in terms of putting money for this private innovation on free tax. They have increased the budget on green gas energy. They have increased the budget on solar. So these are more sustainable long-term action. And I agree with Dheeraj when he said they have stayed away from this populist budget and actually follow the dharma of vote on account rather than trying to be. And I do believe that you will see more policy reforms coming when they come back in July or June and present the full-fledged budget to get into more nuts and bolts of everything. But directionally, I think they have done a fantastic job of balancing that. And
Sure.
on infrastructure, last one point, while we can pick up the number 100 lakhs, 1 lakh crore, 11 all, but if you look at a percent of GDP, it has been balanced at 3.4. So I think the finance minister this time has spoke to the percentage more to the growth rate, right? And they did a great job of comparing with the RE and say 17%. But from a GDP percentage, it's still 3.4, which I don't think is at all bad. And with expansion of GDP, I think fantastic job in that sense overall.
Oh, sure. Thanks for those data points. Mr. Srinivasan, what is your learning?
I have the following takes. I think the fact is that tax revenues have been quite buoyant, and GST collections have been month on month sticking to a 1.6 lakh crore kind of levels. But I think the biggest surprise to me was that for the first time, income tax is higher than GST collections, right? Which is a sign of a maturing economy, because in a underdeveloped or a developing economy, indirect taxes tend to be much, much higher than the direct taxes. That is changing, and that's a huge change. Okay. And to me, the change has been not brought about by reforms in the income tax side, but the fact is that it has been brought about by the implementation of GST. Now, it basically means that a greater part of the economy, notably the MSME sector, which used to be relatively unorganized or informal, has been forced to come into the formal sector, and that means greater revenue on the GST side and greater income tax compliance as well. Slowly, the culture of tax avoidance is giving way to tax compliance, and therefore looking forward to a greater degree of formal growth among the MSMEs. And since as an NBFC which funds only the MSME sector for growth, I can tell you, when I speak to my customers on anecdotal basis, they are saying that we have brought down the cash sales component significantly, because we have the problem of our buyers insisting on a tax paid invoice. Otherwise, they don't get the credit on the GST side. Right. So that plus the entire UPI and other kind of payments which have formalized or replaced cash to a fair extent has increased the tax revenue, and that really bodes extremely well for the future. The second factor is, I think the government has been rather fantastic in helping the MSME sector specifically. Through the crisis situation of the COVID and all of that, I think the kind of schemes like ECLGS have been relatively unheard of as far as the world economy is concerned. First of its kind. And they've done, and that has really helped the MSMEs to tide over the serious issues that they otherwise would have faced. And in continuing with that, and also the government, I think, realizes that in case we have to become a Viksit Bharat or Achai, get to a 5 trillion, 10 trillion kind of numbers, the MSME sector has to be strong in order to not just provide the employment, but also to provide the ecosystem whereby the larger organizations are able to perform. I think that is very clear, and therefore the further boost to the MSME sector is continuing in terms of while there are no concrete measures as can be expected in an interim budget, but she did speak about skill development, regulatory support, making business easy, and also this entire research fund of this 1 lakh crore that has been allocated can be ridden upon by the MSME sector significantly. And even to a fair extent, as the economy grows or the sectors grow, a large part of the PLI schemes also will percolate down to the MSME sector. So all of this really bodes well for a more sustainable and a growth-oriented MSME sector, and therefore a more growth-oriented and sustainable economy. And this entire thing about this, the new Aditya scheme, that 1 crore households having rooftop solar, that will definitely benefit the MSME sector because they are going to be involved in putting these things up and all of that. I think it's a great budget from that perspective.
Sure. So, meaningful thoughts, in fact, very realistic one. And when you were, Mr. Srinivasan and earlier Shobhama were talking about the economy getting formal, I remember, earlier I had an opportunity to have a session with Mr. Nilekani, Nandan Nilekani, and he said something very interesting. He says, we are going from an informal economy to a formal economy, and we'll see the fruits very soon. So that's what I could remember. Sunil sir, back to you, and I have a very important question now. So on the fiscal side, obviously, all of you and everyone has given 10 out of 10, or maybe 12 out 10 out of 12 to the finance minister. We are seeing a great capex cycle, but the growth that we have seen was specifically driven by the public capex. What should drive the private capex? And after the budget, do you think that now the private capex will come? Do you think that the large corporates will not be reluctant or not hesitate to launch the initiative? How do you see that now?
So, Amol, typically, when the government goes for capex, the maximum expenditure goes into the infrastructure sector. And now the government has come out with a very good housing scheme where they say that a large number of rural houses, like 2 crore rural houses, will be built up in the next 5 years. So these two sectors have a very great potential in creating a capex into the private sector. For example, when you go for infrastructure, you require cement, you require steel, you require a lot of wiring and electrical equipment, you require machineries to build up that infrastructure. So it gives a fillip to the other ancillary sector which are providing services to the infrastructure as well as to the housing. So one housing, you can very well appreciate, requires 100 different type of industries to provide their inputs. For example, somebody will provide fans, somebody will provide the electrical wires, somebody will provide the plumbing equipment, somebody will provide tiles, somebody will provide. So all these sectors will be in private sector only. Once they saw that demand is growing through this infrastructure sector, through the push into the housing, especially into the rural areas, it will automatically pull the demand from the various tertiary and private sector. That is one thing. Another thing, the IBC, which has been introduced by the government, is also providing a lot of ease of doing business. Our Indian ranking over and over has gone up. And because of this IBC, they think that now there is a scope where you can exit a company, you can wind it up, where you can find a resolution, and you can keep it as a going concern. So all these ideas are bringing now more stability and confidence about the outside world into the Indian ecosystem, and that will also help in propelling the private capex. So I think the government capex has taken a lead. Now private capex will follow to meet out the requirements created by the elevated infrastructure, the housing requirements, and the other infrastructure push, especially a lot of changes have been announced by the finance minister. So this will all propel the private capex. So I think this will complement, because everybody in private sector, there was a time when many of the corporates have suffered because of the certain policies, and then later on, for example, I can quote for the steel sector, when the government came out with a policy of giving support in the form of minimum import price, the steel sector revived. And those type of government intervention, if they happen timely, I think that will provide a lot of confidence to the private sector to invest into the to do the capex into the sector. So I hope that the government initiative will propel the demand for private capex.
Sure, sir. Let's hope that. So, Shubham, let me come back to you, and understand why aspect of the reduction in the fiscal deficit number. Why is government or the finance minister so confident that they will achieve the number 5.1% next year of fiscal deficit? That is one part. What makes them really confident? Obviously, we have seen tax revenues, but anything else that you actually see which made finance minister very, very confident? And second part is, to achieve that target, by any chance, do you think that the government may reduce their spend on the schemes which have been already announced? Because if she says that I have to stick to 5.1% fiscal target, maybe she will have to go very harsh to maintain that.
Yeah. Thanks. I think great question, Amol. In fact, that was our fear even in this year, where we saw the capex sponsored by the government showing a little bit of fatigue, mainly because there was a risk because the nominal GDP for the current fiscal year was projected at 8.9%, and what was assumed in the budget estimates last year was much higher. So we were anticipating actually some kind of overextension of fiscal numbers, but actually they surprised us on the downside from 5.9 to 5.8. And we believe that going ahead, when you get into election phase, typically you see capex. I'm not talking of the government, but I'm talking of the private sector, usually waiting in the wings to actually execute the capex plans. To the question of why you feel that the government is looking confident of achieving 5.1, I think Srinivas did allude to it, that over the years, simplification of tax laws, GST, compliance, the tech-driven initiatives, all of these have actually brought in a great degree of tax buoyancy. And that is what we believe is going to be a continuing theme in the coming years. The formalization of economy through all these steps is actually picking up pace. And that is where I started my comments by saying that we do believe that the tax assumptions are on a very conservative note in terms of growth. We believe that a 10.5 actually percent of nominal GDP could actually perhaps look somewhere close to 11%. So that itself should be a good kind of a support. Add to that, we are all, perhaps going to go back to the drawing board to review our growth forecasts in the coming year. And given the economic momentum, given the kind of government fiscal discipline, we do see that overall revenue buoyancy is going to increase. And to continue with what even Sanjeev was saying, the manifestation of lower government borrowing is actually into the cost of borrowing. We've already seen, the government 10-year bonds correcting by as much as 7-8 basis points. Going forward with the inclusion of India in the bond indices, JP Morgan bond indices, which opens up the scope of another 21 billion, over a period of time. Plus, given the lower net borrowing program of the government, is only going to be dampening the sovereign risk-free rate below 7%. If you have a sovereign borrowing rate at a lower rate, private sector cost of borrowings are also commensurately going to get lower. We have all the enablers in place. We have capacity utilization at 74-75%. We have very clean balance sheets on the finance side as well as on the corporate side. We have actually corporate tax, which is competitive globally. I think all the enablers are there. In our opinion, once the elections are behind us, when the newly elected government comes into place, we are going to see a very strong, rebound in the private capex appetite. And that is what, in my opinion, should give the government a confidence of being able to achieve those numbers and achieve those numbers more solidly.
Wow, very meaningful. Thanks for adding that. Dheeraj, while we are praising the government for all that have done, the more important factor that we all want is the investments from foreign countries, specifically FPI, FDI, and not just FII. The whatever the positive factors that the government has put in through Red Bahi Khata today, do you think that this is enough to attract the FDI? Do you see pick up maybe in next quarters, next few months in the FDI? Do you see that market will grow significantly? How do you see that? How do you predict that?
Long-term foreign investors, they always look at the macros and they look at the intent of the government. I think the macros are all in favorable for India. I think India is outshining all other countries, large countries, in terms of GDP growth, and there's a clear visibility that it will continue to do well for next many years. So from that point of view, and coupled with the government intent to walk the path of fiscal consolidation, act with prudence, it only adds to the confidence of the foreign investors. So I see that there is a probability. It makes a strong case for India's rating upgrade also. It's overdue, according to me. If we are able to reach 4.5% kind of a glide path that we have for a fiscal deficit, I think that will make India's case for a rating upgrade very strong. So to that extent, we will see, more and more FDIs coming in. FPIs, of course, they have their own way of operating. They look at the valuations, and it's more tactical allocations for them. So they, wherever they see value, whenever they see value, that's when they invest in those markets. But if it is positive for FDIs at large, and we have been one of the a large recipient of the FDIs in the last 8-10 years. So from that point of view, I think the trend will continue. There is a strong intent at the government level also to walk the talk also. So to that extent, I see it's only going to increase. And also, other than the formalization of the economy or digitization of the economy, the thrust to the renewables, alternate energy, is also a very, very big opportunity for the world at large, as well as Indian entrepreneurs also. Even I believe for MSME and smaller enterprises also, they can also ride the transition of the energy and can do a lot more here.
Hmm. Sure. Thomas sir, let me start from where we ended earlier. You also mentioned about SME, MSMEs, and the small Awas, and how these schemes will actually, help boost the economy at a different level. Uh, what kind of changes do you see? Because on the one side, interest rates are still stagnant. We do not know, whether it will go down. Most probably, it will go down next 1 or 2 quarters is what we are hearing. But do you think now there is a scope for a consumption specifically in the rural area to pick up? Maybe people will go for more housing or something. Is there any confidence? What are your readings, and how do you connect it with the budget now?
So definitely, we have seen in the last PMAY scheme. So the government has almost achieved whatever they have targeted. So three crore houses were constructed, and most of the banks have very actively participated, and the scheme went well. So that a house construction means earlier Mr. Srinivasan have pointed out. So the various many sectors get involved in it. So the rural the people will get jobs. So it's like a circular economy. So PMIY, definitely that money will come to the market. So consumption also will definitely increase. And all these other sectors, there is a lot of focus on uh, 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 sustainable livelihood generation. I'm seeing it. So if you just government achieve multiple goals through certain schemes. So maybe so, and the solar rooftop solar 1 crore rooftop solar,
Great.
which was mentioned. So yes, government will achieve, our country will achieve its net zero target by 2070. That's one side. So sustainability targets we will achieve, but at the same time, a lot of energy entrepreneurs will get opportunity. So, for example, actually, we were involved in training rural solar entrepreneurs.
Hmm.
Our foundation is involved in doing that. Urja Bandhu. So they
Hmm.
what they around 100 Urja Bandhus we have trained. So now all of them have got an additional. So now they go and meet their people, and they arrange loans. So they install solar systems, rooftop solar systems. So all gives jobs. Similarly, big companies also have wind energy have got the viability gap funding proposed for that. So that all means that again I wanted to thrust the government's focus on sustainability and also inclusivity. So these two, there's
Okay.
when in a country like India, if the government doesn't focus on these sectors, the poor, the marginalized, the farmers. So unless the government have specific focus on this, yes, country will definitely achieve. We will achieve 5 trillion GDP, 7 trillion GDP. But the gap between the haves and have-nots will increase. So the inequality will increase, and over a period of time, now it is on the higher side. So everybody has to, government and private sector also has to work towards reducing the inequality. So this is for everyone's interest. So I see there is a lot of focus on in those areas. For the last 9 years, I've been closely observing all the budgets, and I'm seeing that. So if you take the schemes announced for farmers, there is also again the food processing, so post harvest schemes. There is a lot of opportunity for private sector to invest with the government support. The interest subvention and the subsidy schemes are also available. So it is not that government want to do everything. Government want to do business, but the government is creating an environment and inviting private sector, and with those specific areas. So around, so I work in and across the west coast areas among the fishermen community. We have close. So the Matsya Samvad Yojana scheme definitely will create a lot of value in the coastal areas among the fishermen community. So direct 55 lakh jobs will create. The will be able to double our seafood exports. So and that this all will definitely will help consumption. Uh, so on
Sure.
a long term basis, I think we are on the right track. We will by 2047 we will Vikasit Bharat concept we will definitely achieve. So the budget is directional
Right.
towards that.
Right. Sure. Sure, sir. Look, over the years, I think government has lost interest in, I won't say insurance, but reducing taxation as a bracket, and maybe tax slabs they gave a different alternative. So the whole point of buying an insurance to save the tax, I think, has gone for a toss now. People will not look at insurance as a saving aspect, and perhaps that's what the government also wants. Uh, so without that, how do you see the insurance, and not only just life but the insurance as a whole, because whether it's health, life, pension as a whole, do you think that it can grow on its own? Because half the people looked at insurance only as a tax saving instrument, and we have not seen anything for insurance, specifically not in this budget. Earlier budget was, in fact, there was a shock. And so how do you see the insurance going without government support, specifically on the taxation front?
So Amol, a few pointers, and I'm happy you took insurance as a holistic, not only with a saving component, because the tax issues come on the saving component of insurance. But look at health, okay? And I think after COVID, the kind of awareness it has just driven, okay? I think everybody now is more proactive, rather than distributors chasing. People themselves are more open, and they understand
Hmm.
the vulnerability much more, right? We
Hmm.
all have lost something in
Hmm.
COVID, right?
Hmm.
And I think that was a wake-up call. So that sector, if you look at, is growing amazingly well.
Hmm.
Another example is because, like health, term insurance has become more popular. So that used to be like 2-3% of the mix. Now it has gone to 6%. It's still very
Right.
minuscule in the life insurance business, but it's gone up. Third, yes, while government has curbed taxation, but if you look at the ceiling, so tax benefits have gone for premium above 5 lakh, right? But those were contributing maybe at the higher end 20% of the business. So there is still a
Hmm.
huge 80% of the business which will still get tax benefit. Okay.
Hmm.
And if there
Hmm.
is this tax buoyancy and if there is rural demand coming, see, my point is with all the schemes of government, disposable income at the end of the day will go up, right? And if we truly have to double our per capita income, right? We have been saying by 2030, per capita income will double, which means disposable income will change. Like we have seen the change since 1990. If you look at the level of middle class, which was pre
Hmm.
1990, and today, a huge change. Okay, and once that change happens, your insurable population goes up like hell. So, the finance minister very eloquently said that in 10 years they have brought 25 million crore people out of the multidimensional poverty level. It was a
Exactly.
very significant data point. Now, as an insurer, how do I look at data point? Okay, now these 25 crore are my potential customers as well, because they might come into economy, they might start contributing, right? And because they will, I know insurance is not your first priority, but once you have a disposable income, right, beyond the roti kapda makan concept, right, and you look at risk and life management, that's a positive for us. So we do believe the sector has a lot of potential. The projections are at least 15 to 12 to 15% CAGR for the next 5 years, right? So yeah, you can take away a lot of shin. There will be headwinds, there will changes, but also remember, to a large extent, government understand that we are one sector which does long-term funding.
Right.
Who buys 40-year bonds? Like government has now launched 50-year bonds. Like we the insurance industry is one of the biggest contributor in terms of buying those long-term projects, bonds, and funding them. So I
Yes.
think no government can dare to try to shake it up. Yes, they may have their philosophy on tax management. They want to tax maybe the higher end of the society. You do some acts sometimes, but
Right.
philosophically, the long when insurance industry was open also in 2000, during the era of Vajpayee, that was the biggest logic. That how do you have long-term funding for projects? Who's going to buy those bonds? Like 30-year paper. Maybe 20 or 10-year back also, the only prevalent paper was 10-year, and then they started 20. Now it's gone up to 50 years. And it's amazing the way the economy has developed. And what Subhda was rightly saying, look at now when the listing will happen in June. The bond market, foreign money will also start coming in. I think this will really change the complexion. So people, once the awareness is there, that's where I started, right? Things will automatically, we see some, I'm not saying it's completely a pull, right? But there are pockets and areas where pull have started. And there are going to be growth opportunities always lying there. It's a massive economy. Our penetration is still 3%. All developed
Right.
economy penetration is 8%. So if the
Yeah.
economy GDP per capita has to double and my penetration has to double, so I see a quadruple potential. That's how we have to look into the sector. So that's where we look at it, and that's where we believe there's a long way to go for us.
No, sure. I think thanks for showing a very different picture, Alok. So Srinivasanji, in fact, Mr. Thomas also kind of spoke about it. But my straightforward question to you specifically on the MSME and SME front. In a way, there is nothing direct for the SMS and MSMEs in a direct proportion or specific policy or something like that. But whatever the changes which broadly which they have done, whether for a tourism or whether for a Matsya will or animal husbandry will indirectly bring a lot of SMEs and MSMEs. Giving SMEs and MSMEs are a credit hungry and they are very integral part of the India's economy now. What kind of potential this budget has put into them? Do you think that they will be more confident to go to banks, look for more loans because the new projects are coming up, new policies are coming up?
I think what MSMEs really want, or what they would really prefer, is stability and certain amount of predictability of their own businesses, right? So if the economy is on a steady state basis, if your interest rates are hopefully, even if they don't come down, even if there is a steadiness in the interest rates, if
Right.
there is a certain amount of steadiness in the taxation philosophy of the government, and if there are ecosystem work like the government e-marketplace, the trades platform, these are all things which are effectively part of the ecosystem which forces greater amount of cash flow being put into the hands of the MSMEs, right? Then automatically any MSME, being an entrepreneur, they know what to do with their own businesses. They just want that amount of additional confidence to come in from the macro sector, for them to take the next step in terms of increasing their own capex and putting that additional amount of money to buy up a new factory or modernize their machines and stuff like that. And
Right.
so they are not looking for any favors. All they want is a kind of conducive environment where they can take that risk, and they are basically trained to take risks, and that's how
Right.
they have been operating. So you just need a conducive environment, and of
Okay.
course, new developments like your tourism sector. And tourism sector is a massive area for the MSMEs to come in. It's not one budget that's going to make a change. I think the very fact that there is a certain positive impact of things like Swachh Bharat on tourism. Why do
Right.
foreign tourists don't come? It is because they're little not so keen on going to dirty places. The moment you clean up the place, automatically the number of footfalls will increase. The second factor, now I did read something about the Ayodhya temple giving a boost to the religious tourism, or the tourism
Yes.
boost to UP itself. Now, if you have to believe all of that, it's everything that really leads to attracting more people, and that would mean more hotels, more restaurants, more transportation, more taxi drivers. All of this is a part of a continuum. So I think over the past 9 years or 10 years that this government has been operating, this ecosystem has been developed in a very careful manner, in a very calibrated manner, and that in itself gives the MSMEs enough amount of confidence to go ahead and stick their neck out, buy that extra machine which they have been holding on to. So I don't think MSMEs are looking for subsidies or any kind of direct, hand-me-down kind of scenario. I think the philosophy of doing business has changed. They are looking for environment conduciveness rather than incentives on a transactional basis. I think that basic philosophical change has happened, and obviously it is also got to do with the relative maturity of the MSME industries. The next generation coming and taking over, which are better educated, more I would say ambitious and forward looking. I think all of these things are been happening at the same time. So I see a great opportunity for the MSME industries as a part of a continuum. And in an interim budget, you can't expect earth-shattering things to happen. We will reserve it when we talk about it in July, when the actual budget comes.
Yes. Yeah, sure, sure. Thanks.
Me,
Thanks for
I'll
adding that.
add something here. I think
Okay.
Srinivasan sir has already alluded
Right.
it very well. But you see, when it comes to private sector capex or a rural demand, you have to see the linkages in that, and see that look at from the entrepreneur's mindset. We look at only one parameter of a capacity utilization, but entrepreneur look at it very differently. They need a decisive visibility of demand to put in a capex, so which comes from a larger intent and the larger ecosystem created by government. And it is absolutely right that it cannot be done through a vote on account or even one budget or even with few budgets also. It is a holistic ecosystem that would drive. And I can vouch for the spiritual tourism. I was there in a long weekend to Varanasi, post Ayodhya. I did not go to Ayodhya, but I went to Varanasi, and I can tell you the town was buzzing,
Right.
and it is automatically creating opportunity for the locals out there.
Right.
Just wanted to add that. Thank you.
I'm sure. I'm sure. So, Sunil sir, let me come back to you, and perhaps in the, I don't know how much time. I think I have a couple of still minutes, so I will take one good question with all of you. So, Sunil sir, my quick question is, we have heard a lot. The government has been talking about Vikasit Bharat and projection of 100 years by 47. And many developments they have already done, starting from PMJDY. My quick question to you, sir, is: do you think the budget which they have presented today, and the kind of they're trying to inbuild, is taking India forward and actually in line? I mean, is the policy in line with the vision which they have showed us of 2047?
So I'll totally subscribe to what Dheeraj said just a few minutes back, that one vote on account is not enough to propel the entire direction of the economy. But the basic aspect of this budget is it is a continuity. It is a continuity of the greater vision of the government in going to the 5 trillion economy and creating a Viksit Bharat by 47. So it's a step in this direction. So I don't can give the entire credit to the budget that this can do everything, but at least this is the step in the same direction, because continuities are maintained, and you can give the credit to the entire masses of the India, because now with the adoption of the digitalization, the transparency is coming almost into every wall, which is helping the government in better tax compliances, which is helping the people in easier transactions, like they don't have to go to the bank for making a queue. They can just scan a QR code and make the payment in a fraction of a minute. So all these things are providing conveniences in doing transactions. And these type of lead, like in UPI, we are leading the world. So this is not just a payment. This is basically infrastructure. It's a big infrastructure which facilitates business transactions.
Hmm. Hmm.
Earlier, if you go to a shop and maybe 500 rupees you have, a small shop will find 10 minutes to uh, find the change to return it to you. Now that 10 minutes he's saving because he has a QR code that can be scanned, and then that can be productively utilized in doing some more activities which he can do in the shop. So that way the incremental productivity with this infrastructure will be created everywhere. And this particular budget is a step in that direction because it is a continuity of that plan, and the emphasis of the government continues to be the sector which can lead to the development and the achievement of the 5 trillion economy. So I think it's a step in that direction.
Hmm. Sure, noted your points. So, Shubham, ma'am, maybe we didn't pay much attention, but if you could give us more guidance in terms of what was government thinking specifically about the, debt to GDP ratio, because while we are praising all the important things which they have done,
Yeah.
let's not forget the debt to GDP ratio is also very high. So, what are your learnings in terms of the government strategy to reduce that, or how the government is looking at it?
I think first and foremost, sequentially, our incremental borrowing has to come lower. That actually restricts the growth in outstanding public debt that we have seen over the past many decades. And if you look at it, the larger point is what does the outstanding public debt do to the economy is eats up into the revenue receipts each year. If you have about 39-40% of your revenue receipts each year being consumed by paying for the past debt, it leaves very little for the rest of the economy to consume in a productive manner. And that is the reason the focus has been to sequentially move towards incrementally lowering the borrowing, so that the you can't undo the past sins, so to speak. I mean, what the buildup in public debt has been, has been, and that's what we are paying for in terms of a higher interest rate burden in the economy. Here, Amol, I would also like to segregate between what the central government does and what the state governments do. And that, to me, is something that we need to ponder and ponder very decisively. Is while center is moving on the path of fiscal consolidation, we need to have similar aggressive discipline being maintained by the states also. At the end of the day, any rating agency, global rating agency, or any investor would look at consolidated public debt. And to me, that cannot be resolved only by one wheel. It needs to get resolved by both the wheels, which is center and states. So it is very critical that states finances also start getting more fiscally prudent, in tune with what the central government has been displaying over the last 3 or 4 years. While yes, the revenue sharing formula is now getting more conducive for states to improve the quality of spending. And when I say quality, bring in more productive expenditure and less on the revenue expenditure. But the point is, it's not going to happen overnight. We need
Right.
to steadfastly work towards bringing down our overall outstanding public debt, which I think a consistent decadal public finance discipline will help us get there.
Sure. Neeraj, you gave a very meaningful explanation some time back. But if I quickly ask you, because that is one expectation which everyone has, do you see now the FDI is picking up? Maybe next year. Do you see there is a growth in FDI going on? Do you see the foreign investors will pump in more capital and not, just invest for the sake of investing, or look at India as a bright spot and it's a new trend, but look at India as absolutely long-term option? Do you think that will happen now?
Absolutely. My answer is astounding yes. And the reason is that the economy is doing very well. There is a stability in terms of a government. Macros are very favorable, and it's China plus one opportunity. What is happening in the China, we are all aware of the same, and it is an opportunity for a lot of investors to look at opportunity in India. Look at what has happened in the electronic space. I'll give you one example with the PLI We started to manufacture now a lot of electronics in India. Total electronics market is about $130 billion. Out of that, now $100 billion is manufactured in India. So that's a big step in last so many years. And now with yesterday out of the budget reduction in the import duties for the component. So again, there is a clear intent that we want that the component should be, we want to make this market more and more competitive. Once you lower the import duty on the components, you will get more competitive, and not only you will be able to compete with the importers, but also you will be able to create an opportunity to export also. So all these things are actually opening up many opportunities in India. See, our per capita is just at about $2,500 level only. And we all know whenever a particular country move from 2,500 to 5,000 kind of per capita, the discretionary spend increases dramatically, because all your basic needs more or less are taken care of, and the incremental money goes into either investments, savings, or on consumption, and largely it goes to a discretionary kind of consumptions. So if you look at formalization, tax compliance, digitization, large population, median income going higher, all this I think will make India as a very big market as a whole. And if anyone has to look forward to invest, I think they need to look at a country which has a ecosystem which is favorable to them. So I see no reason why we will not get more and more FDIs also. As I mentioned earlier also, foreign portfolio investors who particularly invest into private equity or largely through the listed space, they take their own tactical calls, and that is not that important. I think that's been substituted by the domestic flows coming in from the mutual funds as well as life insurance companies. So to that extent, we have a counter of short-term volatility that we get from the FPI's movements.
Sure. Uh, Thomas, a slightly different question. What did you miss? Anything that you missed? Anything that you were expecting finance minister to announce?
Yeah, I was expecting finance minister to announce an increase in the PM Kisan from the 6,000 may go to 9,000. That was my expectation, because we were talking about doubling farmers' income for some time, and it has not yet, we have not achieved that target. So at least women farmers, that was my last expectation. At least women farmers will get from, instead of 6,000, it may get 9,000. But definitely, as I've said earlier, as it is a long-term
Right.
view has been taken, definitely maybe in the main budget it may come up. But overall infrastructure side, the farmers and the rural, the tourism, which Dheeraj, everyone has mentioned, will definitely create rural jobs, and tourism will move. New destinations will evolve if all the state governments use the facility, the long-term interest-free loan facility, to develop destinations and brand those destinations. And especially now, what we have seen is that the small destinations, the eco-tourism centers, these farm tourism, people, even in India, domestic tourists wanted to experience farms, experience. So all these, we need to have an integrated approach, the developing a farm, a dairy, and connected with tourism and the farm tourism. If everything goes together, definitely we will help farmer to achieve double their income. And also it will, once the farmer achieve increase in income, it not automatically, part of it comes to consumption, part of it goes for investment. So that way we are on the right side, even though I expect that government will take these steps in the coming main budget.
Sure. I think in all your conversations, you mentioned tourism as one part. No wonder you're from Kerala working in Trishur. So maybe that is the connection.
No,
So
I've seen tourism, how tourism, certain destinations, how was improved, it brought prosperity to those locations. I've seen. So that is why I still believe that in many of the other countries have benefited out of it. So India has a lot of opportunity in tourism. So mainly if our neighboring
Absolutely.
countries like Malaysia or Thailand has they're a bit advanced, but we will if this focused approach we will reach there. Even Lakshadweep will be a great destination in the coming next to few years.
Yes,
The
yes.
number of airports have already doubled in the last 8 9 years. It's now 145 airports in India already operating.
Yes, yes, yes. Sure,
So
sure. I think
Lakshadweep will definitely take a break in Kochi. So the Kerala also will get benefited.
I'm sure. I'm sure. Quickly, it last just 2 3 minutes left. Alok, anything that you missed?
No, not really. As I said, on a vote on account, you don't expect a lot.
Hmm.
Actually, sometimes we create a lot of expectations. So,
Yes.
uh, principally, I think they have tried to make it a holistic one. But we will be eagerly looking at what going to happen in June, July, because, like one of the panelists said, the government is confident of winning back. So that's why
Right.
you see stability. That's why you see continuity, right? Which is
No.
predictability. I think that's another point which was made very vehemently.
Hmm.
Now, how do they continue it and how do they dissect this in details, right?
Hmm.
Because
Hmm.
from 5.8 to 5.1 means these are also interesting aspects, right? We have been talking about the positives, but it's not
Right.
easy, right?
Absolutely.
The euro price down will help them, but Manrega allocation has gone up. So there are moving parts, and we'll have to really understand the beast once it is dissected in June,
Hmm.
July, and I think that will be interesting run up, and I think we're looking forward to that now.
Right. Srinivasan, once again, with all this positivity, all this, great things that is happening, do you see by any chance for you the cost of funding will come down going ahead? Because when you speak about SMEs and MSME, ultimately you have to lend, and the rate has to be also decent, right? So do you see that, coming down? Just quickly, if you could give us some
No,
light
for
on
sure it will come down. I think the interest cost is high because of the actions taken by the Reserve Bank for various reasons. I think there are two three things. One is the recent action by the RBI to clamp down or at least discourage consumption-oriented lending, unsecured lending, and consumption-oriented lending is in the right direction because it still frees up certain amount of capital for productive asset creation, which is
that.
what the MSMEs and the capex sector would really require. So
Hmm.
that in itself will be a very positive thing. And second factor is that while interest rates are susceptible to go up and go down depending upon various macro factors and pricing, etc., I think the greater level of stability is what is being really looked for because people can price the interest cost in. And MSME's cost, which is spent on the interest amount, is actually much lower than what they really spend on materials and labor and stuff like that. So it's not a major killer if it goes up by a little bit or down. But I think a greater level of stability is the only thing that they need to look for. The second factor is today, one of the other problems that MSME faces is that they don't get skilled manpower. So in the
Yeah.
future, and we haven't really done a great job on skill development, while
Hmm.
it's been spoken about too much, but I think actual work, if it gets done, it will provide a huge amount of employment opportunity, and definitely it's good from the employer as well as the employee side. I think that's exactly what I would really look for.
Hmm. No, in fact, very meaningful thoughts. And the skilling and reskilling is a major issue, not only in your industry, but I think everywhere. My time is up, but just last 1 minute, I will go back to Mr. Sunil. Sunil, sir, quickly, what did you miss? If you could just give us few brief on that in the budget, anything that miss? And I can't let you go being a banker. Do you see what stand RBI will take in the coming policy? Do you see rates coming down? Do you see RBI changing stance? Oh, sir, unfortunately,
Sir,
you're
you're
on
on
mute.
mute.
Yeah.
So what I missed is populism. So that was I thought it's a pre-election budget, so it may have some populism move, but I missed it, so it was not there. So it was a very decent vote on account balanced budget. That is one thing. And for RBI credit policy, I think cards are yet to open.
Okay. Sure, sure. But a lot of bankers messaged me over expecting 5 days a week. from
No, no,
finance minister.
that cannot come as a part of the policy.
Exactly. Absolutely. But thank you so much. I think it's been more than almost an hour since we are discussing this, and thank you so much for taking out a time on a very crazy day and sharing the meaningful insights here. So thank you so much for being part of BTPFSI's budget series. Thank you so much, sir.
Thank
And
you. Thank you, Amol.
Thank you,
Thank you.
Amol.
Thank
Pleasure.
you.
It was enjoyable. Thank you.
Thank you. Hmm.